This is Market Week Live, February 16, 2024. Information and support for traders and investors. Welcome, everybody. We have the room filling up right now. Looking forward to bringing you an absolutely great show. This is just the legal stuff that we have to bring to you. It says that everything that we bring is not to be construed as investment or trading advice, no matter how it's presented to you, oral, written, or in videos, and it should be taken as that we're providing information that you could use or an entity could use with their investment advisor. It doesn't substitute for the advice that you could get from them, and we always encourage you to consult your own trading plan or financial professionals before you take action and trade. Also, you can get our full legal at askSlim.com. Your host today, well, we have everybody on the team. I'm Steve Miller, Matt Serpi, R.V. Ramachandran, and Katie Anagostos. You can learn more about our team by going to askSlim.com, about askSlim, and meet the team. And you can see interviews that we did there, and you get a good idea about who we are. And I'm super, super proud of this team. You're going to see the great work that we all do, and I hope it really benefits you. If you have any questions on our membership issues or website issues that you may have as members, write to team@askSlim.com. If you have any questions on content, information on the education or analysis we teach, if you want a first-time special because you're brand new or you want to upgrade, you can write to Matt@askSlim.com. Let's move forward in here as we begin to look at what we're going to bring in this just jam-packed full show. I'll bring you opening comments on the markets, and then we're all going to bring you a trade planning session where each of the analysts shares a trade idea, and you're going to learn our total approach to trade planning in the markets. Matt is going to review our services, and you're going to see some of the amazing depth of the content services that we bring, especially for level one members. And I want to say welcome to so many of the new level one members. We've been running this special non-recurring. And if you're just peeking in right now and you're not any kind of a member yet, not a free member, you're going to want to take advantage of this special for $10. Holy cow. So Matt will tell you about that. We'll do our express round where we do our Q&A. So we want to encourage you for level 1 to 4 members, so you can add your questions into the Q&A. The floor will be yours. It could be about our services, trade planning, chart analysis, trading issues, anything like that. And we will definitely do our best to answer as many of your questions as we can. Again, we're not going to answer any questions on the stock market indexes in that session. I will be doing a presentation on the S&P 500 towards the end of the show, and I'm going to take that deep dive in the multiple time frame analysis. I'm going to look at weekly, daily, and 2-hour, give you all of my thought process about the conditions of the market right now. And then I'll show you our market condition monitor, which is just a fabulous application that I think really benefits our users. So that's it. That's what we're going to bring you in the show. All right, my opening commentary for the week. Stock market overcame one of the biggest drops that we've seen in months. That came on Tuesday as the CPA came out hotter than what was expected. The headline was up 0.3. They expected it to be up 0.2. And the core was up 0.4. That put it up 3.9% year over year. That is certainly far from what the Fed hopes we're going to get down to. With that indication that, it certainly is not certain that there's going to be the rate cuts that investors had all hoped for, well, they got caught leaning. And the stock market fell very sharply on Tuesday. At the lows, the S&P 500 was down 105 points. That's the biggest decline we'd seen in a long time. It had a rebound on the close, which then didn't stop for most of the week. It finished on Tuesday down 72 points, the Dow down over 500. That was a pretty bad day. This is really in line with what I have thought about the Fed, which I didn't think they're really going to cut rates more than 2 or 3 times this year, and that it wouldn't start until June or later. And Fed Bostic came out and he said, there's no hurry to cut rates right now. They're not in any hurry at all. And the market started to take back some of those expected rate cuts. The market had priced in 6 or maybe even 7 rate cuts this year, and now it's down to more like 4 rate cuts. And I think they're going to price some of that out of it also. So we're in for what looks like the potential for more disappointment on the rate side. Still, Wednesday and Thursday, buyers came back because they want to. They think that the market is going up, well, pretty much forever. And that came despite softer techs, some softness in the AI leaders. Two important ones I think I want to mention are Google. OpenAI, who has said that they're going to come out with a competing search engine. If they come out with something that is better than Google, and that certainly could happen based on what we see coming out of OpenAI, their AI system is just fantastic, and that competition seems to be at least flattening Google out. And then Microsoft, they were down also a little bit as Apple came out and said they're going to release competition to the Microsoft Copilot. Well, I sure hope they come out with something good. First of all, I love Copilot. I think it's great. You don't always get the best answers, but I think it really is great. And overall, when you think about Apple, Siri sucks. So I'm waiting for them to come out with something better than Siri. And worldwide markets, they went up in Japan to an all-time high. Remember that 1989 craziness? And then losing, 70, 80% of its value? Well, now it's all the way back up to a record. And that happens on the same week that Japan has declared a recession. Yes, the last 2 quarters have had negative growth. Japan in a recession, and the market at all-time high. Eurozone markets up also, and the UK also in a recession. That just shows you that investors can look way past whatever news is going on right now, and that's certainly what they are doing. That doesn't mean that they're correct, but you see all the buying that is in the equities markets. Friday, before the opening, the market looked like it was going to head higher. And then the PPI came out really hot. I mean, it was up 0.3% versus 0.1 expected. The core was up 0.5%. That is the hottest core rate in a year and a half. So the market didn't like that at all. S&Ps were up close to 20 at some point. And then they fell to minus 33. And then they moved back up near unchanged. So you see the buyers are still in the market. But with the stocks seemingly turning a little more wobbly here as this inflation news come out, they are still quite strong. This is going to be a tough area for the stock market, in my opinion, at some big resistance and very high valuations. And the leadership is thin and actually starting to falter a bit, but that doesn't mean we won't have some kind of a rotation. I want to talk about this leadership, and I've showed recently some information, some slides on some of our market week shows that have shown the thin leadership that we have had, or the fact that the top 7 or 10 stocks in some of the indexes have been really the leaders. Take a look at this chart right over here. This is NASDAQ versus NASDAQ breadth. And you can see when you look here, almost perfect tracking back over here, 2017, where the breadth and the market movements were pretty much in line. They got into a bit of a disparity right over here where the breadth began to weaken. And then, of course, the stock market went into a bear market right in there. So that was kind of a tip-off. But look at here, this huge disparity since mid-2023. It's actually mid-2022, where there was a move upward in the stocks as these AI stocks took off in a big way, and then a move to the downside, as you can see here, in breadth continuing. Now we've had the market continuing to move up and breadth beginning to falter again. So we have this huge disparity because the leadership is very thin in the NASDAQ. Now, that doesn't necessarily mean that the stock market is going to turn over and go into a bear market. It may be indicating that it needs a rest for a while. And as I say, certainly with a lot of disparities that we're looking at and a lot of reasons to see, and I'll show you that in just a few minutes, a lot of resistance above in the markets and very, very high valuations. That is likely to mean that pretty soon we're going to come to the end of this leg on the upside. I'll show you why as I get towards the end of the show, and what would actually prove that this upside move is ending, at least temporarily. So we're going to get to that in just a few minutes. For the week, stocks mixed, S&P 500 right around the unchanged, maybe up just a touch. The same thing for the Dow. NASDAQ down about 2%. As I said, those stocks are softening, but the Russell starts to move up, and we had some very significant moves in both directions in the Russell, but still gaining about 1.5% on the week. Bond market, 30s up 1.75. I'm sorry, down 1.75% with yields going up. Let's start that over. 30s down 1.75 points, with 10s going up about 12 basis points to 4.3%. That moves into the resistance zone that we talked about. That was between 4.25% and 4.4%. That pretty much was a bullseye for us, expecting yields to move back to the upside. There's still a potential for 4.4 to 4.53%. In other words, more downside in the futures markets, and I'm going to talk about that with a trade idea in TLT coming up in a few minutes. Gold market, metals mixed, gold down about $19. At the same time, silver's moving up 57 cents. And this is a very choppy time for the metals. But we're seeing some strength coming in the industrial metals, silver and copper, at a time that I would have expected they would still be moving to the downside. So we're pegging that for a potential change in our analysis, but we'll see. We updated those charts for our members today. Oil market, 5 weeks in a row of a lot of chop, up about 90 cents on the week right now. I believe that there's still some chance to trade up to about $79, but then I think there's a corrective period coming. And our target right now for the downside during that correction is at around $70 in the oil market. Now that's up from what was an original target of about $64.50. That is the opening comments. For those of you that are watching the show and you are not, you're watching a video right now, you're not watching it live. I just want to tell you, you can watch the show. Premium members are sent a link to participate in levels 1 to 4, the ones that ask questions in the Q&A. And free and non-members, if you're just brand new in here, you're watching askSlim Team channel here on YouTube, and we encourage you to subscribe to our channel and become a free member if you're just very the first time that you're coming to our website or watching our shows, and you'll start to get a feel for the things that we bring. So that invitation again is you can become a free member or Snapshot Lite, where you're going to get just a look at our daily information. You can subscribe to that or take advantage of the special that Matt is going to show you with just a week to go. On YouTube, do subscribe to the channel, click the notification bell, like this video, give it a thumbs up. On X, follow it at askSlim. And any questions you have on anything we're presenting, please send that to Matt at askSlim.com. This is trade planning with the askSlim team. We're going to take you from analysis to the trade idea. You can see the ideas that we're going to do here right now. So I want to give you a little, preliminary here as to how we do this, and that is we all look at our analysis all during the week, and you can see that we come up with different ideas. We all have the same approach to our analysis, of course. This team learned from me and the style of analysis that I developed all the way back when I started to become a trader in the CBOE in 1974. And they all came on one at a time, learning what we did, and all have become experts in this style of analysis. So great team, great analysis. So when you look at the fact that we all came up with different ideas, it shows you the importance of having a sizable universe. And of course, we look at 300, 400, 500 stocks and 24 different futures plus ETFs. So we look at a big universe of stocks, and it changes now and then because our members ask us different questions and we do expand it. And this analysis comes out of that very large universe. I always encourage people when I coach them that they should have a universe of at least 50 or 100 stocks and ETFs and even futures in order to have be able to really learn more and be able to find trades in there when there's not a lot going on in the markets. Um, the analysis is some of the evidence analysis. We use multiple time frames cycle analysis. Essentially, we're looking at money flows, the rhythms of the market or the heartbeat of the market. We add in our proprietary indicators, which are based on momentum, support, resistance levels, which we do through our swing high and swing low analysis and our projections that we put in. And as we project in price and time, which almost no other group of analysts does. They usually give you price projections without a good idea about time. But that's one of the things about cycle analysis is that you can really get a good sense about time. So we're going to show you our analysis right now. And I'm going to look at TLT, which is the bond market. Katie will look at McDonald's. RV at Ford, and Matt is going to look at Apple. And you can see we're put in there the direction that we're going to make the trade. And RV is the only one bringing a long side trade now. And three of us have short-term outlooks, and Matt is going to have an intermediate term outlook in his analysis. So let's switch over now as we look at TLT. So when I do my analysis, I always open up this type of a grid. This has the weekly on the left and the daily on the right. And that's what I want to look at is, let me just get these pointers up properly here. What I want to look at are the cycle rhythms and the momentum conditions in the market. So the first thing I'm going to look at is what are the longer term dominant forces? And that's on the weekly chart. This is really a very interesting one because you could see the cycle brackets on the bottom. And each of these dominant cycles, which is measured from the low to the low, is divided into 4 minor cycles. So these are kind of quarter cycles in here. And something happened in here. And what would normally be the final cycle or the fourth cycle that you see over here, aligning with the dominant cycle would normally bring the biggest decline or what we call the period of risk. However, as this moved up, and this is our momentum indicator right over here, you see that green arrow pointing to the upturn in the reversal scout, that, would normally move up and then it would turn down again pretty soon and you get this big sell-off potentially in here. But it lengthened in time and moved up through the 78.6% resistance. And that told me that something was changing, that the energies, which have been around for many, many years with very good alignments, now were shifting. And so I have this note in here that the cycle is shifting for our members there, and it moves back one full minor cycle. That means that the dominant forces really ended right over here. And that's why you see that shifted cycle with the dots right there. What that sets up, and I'll just look a little closer in here, is a condition where the dominant resistances were met and it failed. The momentum turned down here with our reversal scout, and that told me we're in a corrective phase. Now, this correction is likely to get support in here, but time-wise, you can see the note in here. Synced troughs end in March or April, so that our users know that the daily chart show that there are lows or potential declines into the end of March or the end of April. That tells me that this declining phase is likely to last that long. And then it tells me that this daily chart in here is likely to have not only a decline right over here, but also a rally and then probably another decline over there. So I have this noted as sell pending. In the meantime, you could see the very nice cycle rhythms right in here, where the lows are showing up where they should right here and projecting out in time to the ideal trough here at the end of February. Or if I highlight this, right here towards the end of March or the beginning of April. So that says that when it gets up into this area, it's a sell zone, and that's why it's marked sell zone. So this is a short as far as I'm concerned. And remember, I said that I thought yields would get up in the 10 years to 4.4 to 4.53%. This is in line with that of a decline coming right over here. So this is the short-term decline I'm looking for. I think it's shortable now. You could see the momentum here on the slim ribbon where it is facing to the downside. That turns these bars red. And you can see on here the slim ribbon PO is red. You can see when it was green and it gave you all these resumption arrows right there, the market was just in solid upward move, and the slim ribbon often gives support. Now you can see the slim ribbon giving the resistance right over there, and in a declining mode, in a declining phase, as we call it right over here, rising phase, peaking phase, declining phase, and then the bottoming phase. So that says to me there's a decline coming in here, and then probably a rally, and then another sell zone, which will be established through wherever this low is made right over here. So there are two opportunities in, as far as I can see, a very short term, or what we might call near term in here, and then a rally, and then another selling opportunity somewhere out over here. So that's a look, as you can see, as I look at the weekly here, and I see the declining phase and the negative momentum. I look at the daily here, I see the declining phase and the negative momentum, failures in resistance. It just speaks loudly to me that there is very likely selling opportunities like we just had still out there. And that makes this, in my opinion, a short-term short in TLT. In other words, we're looking for still some rising in or increases in interest rates on the short term, maybe out for the next several weeks. That is my look at TLT. Now I'm going to invite my team to come on, and Katie will be next looking at McDonald's. Katie, you can take it.
Okay, let me share my screen. Let me know when you can see McDonald's.
Got it.
Okay, great. So we're going to start by taking a look first at this weekly chart of McDonald's. And I want you to notice this positively configured cycle and right-hand translation. That means that the peak of the cycle occurred on the right-hand side, leaving little time for a retracement, and also that the cycle ends higher than where it began. Here we got a bearish engulfing candlestick just above the prior cycle peak and began to retrace. The reversal scout is purple, showing negative momentum. And we have a weekly cycle timing window that begins on Monday and goes through mid-April. So that period of time is when we expect McDonald's to make its intermediate cycle low and then begin to move up into the rising phase of the next cycle. So this will be bullish once we have confirmation that our intermediate low is in, provided that it continues to hold up through this timing period. Now let's switch over to the daily chart. Here you'll notice that the cycle that we are currently in, it ends in mid-March. So this cycle fits within that cycle timing window from the weekly chart. Momentum in here is negative with both the reversal scout as well as the slim ribbon that colors the candles red, green, or gray, depending on the momentum. So this prior cycle was negatively configured. It ended lower than where it began. So when that happens, the probabilities favor not being able to take out the prior cycle high. So we created a resistance zone using that prior cycle high and the prior cycle low. And we are trading just below the 50% fib of that resistance zone. We also have a 78.6% fib up here at about 298. So we're going to watch these levels, and we're going to watch the momentum on the lower time frame chart for a short side entry going into this March time period. Momentum on the 2-hour chart turned positive yesterday, so we can watch that for an entry signal. Now, in terms of a target price, these green horizontal lines down here represent the supports from the weekly chart. So our initial target is about 281. That's basically a retest of the cycle low. And if it breaks below that, then the next would be the 50% fib at about 274. Now, if McDonald's were able to get through these upside resistance levels, then momentum would have improved in here, and that would indicate to us that something has changed, possibly an early intermediate low. So that would invalidate the trade idea. We'll be keeping a close eye on McDonald's for it to respect these levels and return to negative momentum on the lower time frame charts to give us that bearish entry. So at that time, depending on the implied volatility in the options, you could buy a put or a put zebra if your account size allows that. You could also buy a put spread or sell a call spread. And that's my analysis on McDonald's. Over to you, Arby.
All right, Katie, thanks so much. Let's go ahead and jump over to my screen and we'll look at a long trade idea in Ford. So this is a chart here of the weekly and daily for Ford. Let's go ahead and pull up the weekly time frame here, and you'll see that that we have just formed a key low here in Ford. There was a low that was due right around the end of last year. We turned up very nicely. Let's zoom in a little bit further here. Turned up very nicely, put in our first higher low, and then obviously turned up since then. Overall, this is still acting fine. We're looking for a move through the 61.8 at 1321. Then we have the 78.6 up here at 1413. So it's overall acting fine on the intermediate term. Shift over now to the short term. You can see that we had a low that was due here, right around this area right here. We turned up, put in the slightly higher low, got to move towards that 78.6, put in another higher low, and then a higher high on an earnings move, and then now a nice flag. So what we're looking for is for it to hold this zone right here. If it loses the 61.8, that would say that this is, likely not going to work. So that risk on this idea is right around 50 cents. We're looking for a move into this zone here in blue, which is 87 cents higher from the zone on the downside, and that's 1308 to 1369. Okay, so that's our overall picture here in Ford. Acting well, we are watching for a flag, and then for this to turn up shortly, as there is a minor low that is due right around now. And that is our look here at Ford, and I will hand this off to you, Matt, to look at Apple.
Excellent. It is always fun and interesting to see the team perform their analysis and step through the trading plans. I'm going to share my screen. Just give me a thumbs up if you can see the Apple Weekly. Excellent. So as traders, we have the job where we have to wear multiple hats. We have to be a scientist, an analyst, and a strategist. We have to integrate these skills, as you see with the team here, so that we can devise an objective methodology, apply the methodology to produce technical evidence, and then convert that analysis into a trading plan. There are no certainties. However, your methodology should put the odds of your trading plan in your favor, and then you have your money management rules to control your risk. So as Slim and Arby mentioned, I'm going to do a segment here on Apple. I have up here the core trade planning questions that we like to look at. You're going to be able to define your outlook period, a directional bias, your key levels, including reevaluating where things have changed. And then you need to be able to determine, once you've completed that process, that's some of the evidence. Do I have a clear tradable edge? And then from there, what are the signals that you need to see so that your trade setup is a go? All right, so as we look at Apple here, and we look at where this cycle completed, it actually was a overall bullish condition, a positive condition, where we had the close of the cycle really only coming into about the 38.2% retracement level from this prior cycle low to where this corrective phase ended. And coming into this next cycle, you would then expect, if you had a positive overall condition, positive cycle structure, that once that momentum turned back up, there was a higher probability that we would retest or break out above that prior high. That's exactly what Apple did in this rising phase. But then it ran into trouble. And when that gap down occurred in the beginning of the year, that momentum on the weekly shifted negative. And since then, it has really traced out some lower lows over the weekly periods. And that has affected, on the weekly chart here, the overall minor cycle structure, turning that negative. So that's the picture on the weekly, but really it's where, when we get into the daily chart, where the additional details emerge for solidifying the trading plan. And as Slim mentioned, and as you see with RV and Katie, it's very important that you have this multiple time frame ability to look at the analysis so those details can emerge. So I'm looking at the daily chart here. And when we came into the January period, we set a cycle low, and we had a decent rally off of that low in that rising phase, actually making a couple of prints above that 78.6, but then things turned negative rather quickly. And we actually had a violation of the prior cycle low. We had a test of that cycle low here in mid-January, and then we actually broke it here in early February. This then shifted this pattern structure negative and suggested that we had a left-hand translation that had occurred, and that the rallies were likely to struggle, and that now that we're into the late peaking and declining phases, the risks pick up. So you have time against you if you're a bull and time with you if you're a bear, and you also have right now, based on the price action, you have the trend a negative. So that cycle structure is negative. So now what we're looking at here is over the next, and I have an intermediate outlook, it's probably the next 2 to 4 weeks or so. So typically the intermediate outlook is 3 to 8, our short term is 1 to 3. So it's right on the tail end of that short term getting into that intermediate, where the projection zone comes here right around 177.60 to 173.92 based on some swing high, swing low analysis that I performed. And right now I have a couple of reevaluation levels to pay attention to that would suggest that I have to review the analysis. The first is a close above 190 would force me to reevaluate that downside projection. And then the repair of the overall negative condition would occur with a push above 192.80. So that is the review of Apple at this time. And finally, I wanted to say about what are the signals that would suggest that a trade is a go. I think that's always important to look at. And that would be one of the examples here is the Slim Ribbon PO, which fired a negative continuation signal here on February 13th, suggesting that this rally attempt, while maintaining that negative momentum, was that rally is likely failing, and the continuation of the more dominant negative momentum was beginning again. And that's what you saw here as we've continued now lower. And now as I pull over a multiple time frame grid here, this is really what it takes to get a good sense of other potential signals that suggest the trade is a go in that direction that you're looking for. And you can see here that the Slim Ribbon turned negative. This was on 212. So these, I'm just trying to provide some examples of shorter duration timeframes that help with making those entry decisions. And then even on the 15-minute here, if I saw the Slim Ribbon return back to negative, that would suggest that a continuation on that downside was likely in motion. All right, there's my review of Apple. Back to you, Slim.
Great job, Matt.
Thanks, Harvey.
All right, that was some super analysis by the whole team. Matt, I'm going to let you stay on here and come back and tell us all about what you have about our services this week.
Excellent, sure. This week, I'm going to talk about, as Slim mentioned, we have a great special going on with level 1. So I'm going to share my screen again here. We'll be brief, but I'm going to be thorough on why this is important for you. If you are new to askSlim, or if you've taken a break, or if you're curious about learning about technical analysis, level 1 is a fantastic opportunity, and it's extremely immersive to be able to learn about our what we do here as technical analysts and as trade planning specialists. So as Slim mentioned, we're currently running a $10 special. It's for 1 month, non-recurring. It's 50% off. So it's an incredible deal for you to be able to get a handle on what we do. And you are going to get a chance to see what we do on a daily basis. So I'm going to pull up here very quickly our level 1 dashboard, and I'm going to go into the daily snapshots. The team puts in several hours on the stock market indexes on a daily basis. Between myself, Slim, RV, Katie, we're all doing analysis on the stock indexes. So this has to be the most comprehensive analysis on the stock indexes that you're going to see especially if you're interested in the type of methodology that we're talking about when it comes to cycle analysis, momentum analysis, swing high, swing low analysis, and then putting it all together at multiple time frames. So what you're going to have with the daily snapshot is it comes out every single day, and there is going to be a technical briefing where we highlight, and I put this together and I publish it based on the work that the team does and my own work. So you get a snapshot of past technical highlights that are important to note. And it is very detailed so that you can learn about the methodology, but then it gets very specific with noteworthy updates that are occurring that I put in here on a daily basis with key levels, with projections, with the cycle analysis, configurations, translations, structures. You're going to learn a ton. You're going to learn about everything that we do, and you're going to have an opportunity to also get on Discord and ask questions about the work that we do. So we have this for the S&P 500. We have this for the NASDAQ 100 and the Russell 2000. It includes more than 12 charts. So you're going to get our work that we do on the 2-hour chart with key levels in terms of support, resistance, projections, our momentum indicators. You're going to also get that on the daily chart. Let me get back to the daily chart here. Again, these are updated on a daily basis, and this is put out at typically after the market closes, somewhere between 5 and 8 p.m. Central Standard Time, giving enough time for all of the work to be completed. And then we have questions. Well, Matt, where do you sort of put it all together? Well, there's an area in here called Matt's Trade Planning Price Projections, where I perform similar to what you're seeing right here, a sum of the evidence, a review, and then I do a short-term outlook, 1 to 3 weeks, intermediate outlook, 1 to 2 months, and then a longer-term outlook where you can see the upside and downside projections based on the current conditions. And I update this I review it every day and update it as necessary, giving myself an audit in terms of when the levels are reached or not. So this is, again, a culmination of our methodology and then being able to see it applied on a daily basis. And for $10 a month, it is an incredible opportunity. This is just one of the features of Level 1. I'm not going to get into all of them, but we do have an ETF report where you get to see the key sectors of the S&P 500. We also have our simulator momentum tracker, which is a fantastic tool that gives you a look at over 1,000 symbols. And this is more for position traders or active investors with a 3-month outlook. And again, this is an introduction to our momentum principles. And you can see that on so many different sectors, and we have a pre-established watch lists, and you can sort by directional bias, very quickly getting a sense of which ones are the most positive, which ones are the most negative, or which ones are neutral. So many great tools and features available to you even as a Level 1 member, and it only really gets more expansive and comprehensive as you increase in your levelship members. And we do have something for day traders as well. All right, Slim, back to you.
All right. Absolutely great stuff. Can you believe that is $10 for the first month for all of that? We really want you all to be able to get a very good sense for what we bring, those of you that are brand new to askSlim. And this is just such a great way to get our information every single day. And that momentum tracker is just a great application. So thanks for showing us that.
Yeah, and on the homepage, Slim, that's where they can access the link to be able to purchase the special.
Yeah, that's right. Click the Learn More button up on top, and you'll be
Correct.
able to do that. So great. Absolutely fantastic. All right, this is our Q&A. We have a number of questions already in our Q&A right over here. So we may not be able to take them all, and we're going to ask people if you just take 1 more minute if you have a question to put in there. If not, we're going to cut them off. I see a couple of questions that I want to just answer really quickly. A anonymous attendee asked, the Slim Ribbon shared script in Thinkorswim is asking that he saw on TradingView that it colors the bars based on the conditions of the Slim Ribbon, and wants to know if it does that on Thinkorswim also, which it does. Yes, it colors the bars to, you can actually change it, but I think I have mine on red for negative and green for positive, and purple or gray, I think I have, for neutral. So you can adjust that, but yes, it does do that. And we really encourage people, if you're just getting used to our type of analysis, since that indicator is free, you then can get a good sense for how important the slim ribbon is as a tool for momentum. Let's see, we have some questions on some individual stocks that I'm sure Ivy and Katie are working on right now. I have a question on gold and silver that I'll take. There's a question on RUT. And I'm not going to show the RUT now, but I'm going to show the S&P 500 pretty soon. And I just want to encourage you, if you're not a level 2 or more member, to do that, and then you'll be able to get all of our charts, especially in the charts hub. So the question from Walter is that the RUT is not in sync with the other troughs in S&P 500. And can we assume that their troughs will not be as significant as when all three come together? You know, I just right now treat the Russell differently than I do the other two. I think it's got a life of its own, and I think that's because of the rotationary conditions of the market. So I do treat that analysis pretty much separately, and if they do come together again, well, I think it'll become pretty obvious. Let's see. I think that's all of the questions there. I'm going to switch over to silver and gold. Is a really good question right there. And that's the only futures question, I think. So then I'll turn it over to Arby and Katie. So let's switch over to the gold and silver market right now. So here's the gold market. And I always look, of course, at the weekly and the daily conditions. Now, when you look here at the gold condition on the daily chart, you can see all those yellow zones. Those are periods of risk. The periods of risk are worse on the daily chart when the conditions are negative on the weekly chart. So we have here the reversal scout. You could see here when the conditions were negative right over here, the declines were pretty sharp that we saw right there. Then when the conditions turned positive on the reversal scout right over here, then you saw that, you know, the advances were really strong, which is very typical. So the dominant forces that come from the longer cycles are really important. The team had a lot of discussion about this week about that because I factor in monthly charts when I look at weeklies. So I'm always looking at what is the most dominant force. Right now we have negative conditions. We have a cycle that's likely to come down here into April, and that makes this period of risk pretty significant right there. So I'd be looking, you can see this cycle right over here, that broke that cycle support. That says that this rally is likely to fail. You can see in here the slim ribbon turning negative. That makes the slim ribbon PO red, and when it gets above this 25 line and then turns below it, it will give you a red arrow warning that it's resuming to the downside. This is a negative period right over here. So if you look at the timing right over here, that says, and remember this because we'll look at silver also, this says the third week of March is around the ideal trough. Here you could see that I have it marked here, the end of March. So because there's a time window in here for this ideal low. So that means that rallies over here are likely to fail, but this is a pretty good support area. So we're not looking for big declines. This would be a move down to 1988. This would be a move down to about 1950, sometime between now and the third and fourth week of March in the gold market. So now let's look at the silver market /SI. And you're going to see that there are correlations here, of course. Now here you could see I have the gold cycle overlaid, and here is the silver cycle. It's shifted a little, that's why it's dotted. And you can see that this time frame right over here is for a decline out into the third week of March. So it's you know, very much in line with what we're looking at. But look at silver here. It's exploded back up to this high. That says to me that something is going on. Something is changing. There's an energetic shift coming, and I don't have that analyzed yet on this chart. This chart has got some very good rhythms that are in here. And what it says to me is either we're getting a shorter cycle developing in here, or there is a shift in the dominant forces, and instead of the bottom being over here, it's over here. This getting up to this level is very important. You can see cycle peak resistance breakout positive. So that's an important message to our members. And you can see here the momentum was negative, but now it is turning neutral again here on the daily chart. The momentum here on the weekly chart still negative, and it's getting up close to resistance, but you could see very clearly looking at this that the silver pattern is changing and that it is stronger than the gold pattern. So the question was really about gold versus silver, and you can see that looking at these cycle patterns right now, that silver is getting stronger than gold. But if you really want to see a confirmation in here, this is a chart that you won't really find anybody else showing you. And this is the gold versus silver relative strength chart. Now, on Thinkorswim, there's a way to do this, and that is to take the gold minus 87 times silver and zero it out, which is essentially what I did over here. So that the reason it's 87 is because right now that ratio is 87 to 1, silver and gold. And you know, the historic levels are, I saw it, I think it's 17 back in 1981. Yes, I was trading back then, back to 74. And then, of course, we had it well over 100 in recent years. Now, what does this chart mean? Well, first of all, what's in here, because I've essentially zeroed it out, is because it's gold divided by silver, it means that when it goes down, gold is weakening. There's also a rhythm in here, and I have the stochastics momentum index overlaid on this so that you could see the rhythms on the changes in the relative strength between gold and silver. So to me, it really screams out and tells me not only some timing sense on the gold and silver, but also gold versus silver, but also a good look at which is stronger and which is weaker, especially if you're interested in doing a pairs trade. So what this says is that the gold and gold silver ratio is coming down. I don't have that ratio figured out what it was up at this level, but it was probably up in the 90s. But now you see the gold moving down relative to silver right over here. In other words, silver essentially getting stronger. And I showed you that on those charts. So remember, any chart that I show, if you're a level 4 or level 4 plus member, you can request that from me and I will be glad to send that to you. But level 4 plus only gets our charts for the Thinkorswim platform. So I wanted you to see that. It gives you a great look at that gold versus silver, and hopefully you found value in that. And I'm going to turn this now over to RV and Katie.
Okay, I'll share my screen and we will look at Palo Alto Network. Somebody requested that. Let me know when it is up.
Got it.
Okay, great. So this is a very bullish chart all the way back to the spring of 2020. Every cycle was positively configured except for this one, which was essentially flat. And this cycle too, also very negatively configured. We have very strong positive momentum. The reversal scout has a very steep slope and it's essentially riding right up there. And we've crossed the 127.2% extension. This 161.8, if it can get up there, is just above $400. We do have a timing window coming up. That is April 15th to May 27th. And we have these supports that are rising. I do want to point out one thing. This blue ribbon is the 34-week moving average. Notice how in the retracement, it tags that here and here. Here it got below that. Here it tagged it too. So if that happened again, that would be a pretty steep decline down to, if it started to retrace right now, the 280, 270 area. So we'll have to see how this shapes up. So far it's bullish, but very extended from its moving averages. If we switch over to the daily chart, you can see these cycles are fairly consistent. We had an early one right here on earnings. Let's zoom in. So in this current cycle, positive momentum, the slim ribbon is coloring the candles green, our reversal scout also green, riding up the slim ribbon. Moving averages here, and we've gotten close to this 127.2% extension, expecting a pullback into the time period between February 22nd and March 1st. So this is a quite bullish chart. Let's now switch over to XLRE. Someone requested that. That's the real estate ETF. And you can see the cycles in here, also quite consistent. We had a nice move up off that low after a negatively configured cycle. We broke through that cycle peak and approaching the cycle peak here at about 42.21. We had this 127.2% fib right around 41 and change in the middle there. We got up to close to that and backed off. Now we have a negative slim ribbon, but you can see this candle today looks very strong. This is about mid-cycle. This is an odd number of bars. It's a 31 bar cycle, so difficult to put in a half cycle, but it could be getting a mid-cycle bounce here. And the support zone has held. Let's take a look over at the daily chart. Okay, we are coming out of the cycle bottom here. This is a 24 bar cycle, negatively configured. We created this resistance zone and we got up to the very top of it, backed off a little bit, but projecting to possibly get back up to 39.27. That's a 78.6% fib. If it gets through that and breaks above the prior cycle peak, then we will be like in a rising phase off of essentially a minor half cycle in here. Next timing window is out in towards mid to end of March. So this one we'll have to look and see how it shapes up. And I think that was all I had, right, RV?
Yep.
Okay.
All right. Great job, Katie.
Thanks.
Let me go ahead and take over the screen. We'll look at 3 other symbols. We'll look at ISRG, Roku, and Caterpillar. So we'll first see ISRG. Pull up the weekly chart. So ISRG is in a very bullish overall mode here. You can see a clear now higher cycle high versus the old high, higher low versus the old low. Highest odds would be that it would move to new highs as it did. And we are still clearly moving up. We have a zone here from 395 up to right around 431, a low that is due out in the later part of summer. Overall, we are still looking for higher into that blue zone that I just mentioned to you. Let me move this over. Let's go ahead and shift over to the daily time frame. Also really quite positive. You can see that there is a low that was due really right around now. We're looking for this to turn up. First level on the upside is that 78.6 at 387.5. A move through that level indicates there are good odds of a test of that fib right here, right around 404. If it loses this low right around here at 371, then it would turn this negative in the short term. If we shift over to Roku, Roku was one that we were actually looking on the short side of for a trade idea. We were waiting for earnings. Unfortunately, it chose to blow up on earnings. So that these things happen. There is a low that is due 219 to right around 41. We're looking for still lower. So if it does have any kind of bounce here, would not look for it to hold just like it did right here. A small rally, quick sell-off, any little uptick here, we will be looking on the short side for a trade idea for a move down through that 78.6 at 66.5. This old low is at 55.68. We shift over to the daily. You can see we had a low that was due here. We were watching for it to rally, ideally right around this zone failure. You can see it was 92.78 up to around 98. We're looking for it to form a high and then turn down, and it is doing so. So if it has any kind of try back on the upside, we'll be looking for it to fail quickly and then turn down, as we've added in here. That next key short-term trough is due in the early part of April, and that would sync up with the weekly low as well. Okay, so there are good odds that we would form our next key trough in Roku out in the early part of April time period. If we jump over now to Caterpillar, we're looking at this one as one that is trying to form a high. You can see that we had a move up on earnings, sell into the low, into the close of that bar. We are now trying. What I'd like to see here is for this to start to curl back down on the downside and put in a lower high here in CAT with a trough that is due on the intermediate term 4/1 to 5/27. On the downside, right now we have higher cycle highs and in all likelihood higher cycle lows. So we'll just be looking for a move down to right around 292.5 to 279 or so in Caterpillar. Still overall in a positive mode and just simply watching for a flag to form on the intermediate term. Jump over to the daily chart. You can see that really nice move up and then on earnings, a big sell. Now, what we want to see here is you can see that this bounce was just perfect, right? When there was a low due turned up right on time. Now, we would like to see this, as I said earlier, put in a lower high and start to curl its way back to the downside as we have drawn in here. A short-term trough that is due 3.7 to right on 321, moving down into this zone. It looks like a high odds play here, 312.86 to 298.43 here in CAT on the downside, and you can see on the upside filled right in our zone here from 335.78 to 352.07. Okay, so that's a look here on the upside and downside at Caterpillar. Slim, back over to you, sir.
All right, great work by the whole team. Thank you very much. I'm just going to answer quickly a couple of questions. Thank you. The user just said newbie here, enjoying the service. Somebody else actually said that and put up a request for some charts, but we don't have really time to do any additional ones. So thank you, and really welcome to all of those people that are brand new. I'm going to quickly answer three little questions right over here that came in. I'm not going to look at any charts on them. This comment from Jack says it's another day that reversed, though declines are weaker than advances, and asks, have you ever incorporated advanced decline data into the analysis? Oh, I look at it all the time. I want to know the condition of the market based on that, and it helps me understand breadth. I talk about breadth a lot, as I did earlier in the show. But you're asking, do we look at the percentage of stocks above the 50 and 200-day moving averages? I actually don't look at the 50 and 200-day. You might have seen in other shows that I did talking about overbought or oversold conditions as individual symbols move from and a significant distances from the 13 or 34-week moving averages. It is a similar type analysis. We don't do the calculation on how many are above or below, but I do think that that does have value if you do like to look at that for extreme conditions. Jeff is asking, says normally VIX and the indexes have inverse relationships, but our analysis doesn't show that. Well, I would disagree with you. I think it does show that. Where we've been looking at a very important bottom in the VIX on the weekly chart, also in line on the monthly chart, and that we were expecting that over the next couple of years, there would be some very large moves to the upside in implied volatilities. At the same time, I'm looking at the stock market at important resistance levels where I think it's going to have a lot of failures. So therefore, I think that it is very much in line. If you're looking at little wiggles on the daily chart, then I don't think you'll quite find it as much in line because the VIX has quick jumps and then comes all the way back down. So we look at windows of time where there could be some big moves in either direction in the VIX. And right now we're in a time where there can be some great potential moves to the upside in VIX and downside in the stock market. That's all the questions that we have. It was a great Q&A, and I appreciate that. And I want to invite lots of our new members or free members to join us as a level 1 or more member to be able to participate in the Q&A for the next time we do a live show, which is going to be in a couple of weeks. All right, now we'll get into stock market analysis. Important information that I want you to look at right here. Do read this chart. It talks about our approach to the market and you then adopting our analysis, bringing it into your analysis, and the importance of trade ownership.
Slim, I think you just have to share your screen. I think we're still looking at us. Yep, there you go. Beautiful.
All
Good to
right,
go.
sorry about that. I actually shared it and then it seemed like it disconnected there for a second. So, but I'm glad to be back here. So this is the important slide. So please do watch this slide right over here and talk about look at it with the perspective of you taking trade ownership of your own trades and applying the analysis that we bring to you, combining that with your own analysis. Stock market multiple time frame analysis and projections. I'm going to take a deep dive into the S&P 500, looking at weekly, daily, and 2-hour charts. I'll take a peek at our market condition monitor, the MCM, and look at how that aligns with the analysis, what you can get out of that, and how you could have used the MC up to your benefit just in recent weeks. So let's take a look here as we switch over to the S&P 500. We are looking at the weekly on the left and the daily on the right. Now, for those of you that are new members, those of you that may have just seen the analysis that got posted this morning, Matt does that, and I redid the analysis and sent it out to our members after that. So the charts will look different. The reason for that is because I had enough time pass by here on the daily chart and enough information off of the intraday charts to tell me that an important low was made right over here on that big down day that we had where it fell 100 points intraday and then began to move up. And you could see the new cycle structure formed in over here. And I'll talk about how I formed that in a moment. This is a look at the weekly chart. Now, one person had put a question up that I didn't answer, and that is, based on the movement in the S&P 500, would I then upgrade where I thought the declines would be in the market? Well, essentially, the market does that on its own because it raises, as it moves up, it raises the supports. Now, why is there a projection on the downside in here of some significance? Well, you see, the first one that I have right over here is down to that 23%. That's only down to 48.23. That would be a 4% decline. A 4% decline in the conditions of both cycles coming down is too small. This was 10.9% right over there, as you can see in that correction. The likelihood of it coming down here during this time frame out into April and stopping at 48.24 is very small. The likelihood of the lower track right over here getting down to this is the 38% weekly, this is the 23% monthly at around 46.74 is much higher. Here is that 34-week coming up here, what is very likely to get down through, which says to me that sometime in the next several weeks, we're going to have a decline that starts and then come down most likely to this level over here of 46.71. You know, when the market was strong up here and hadn't turned down yet, and I'm talking about a correction, most people say, what are you talking about? Why can you even speak to that? But the market rhythms tell me that. It's just normal money flows. It's normal that there would be money coming out, and this would be something like a 7% correction down over here. That is really too optimistic, in my opinion, still, with this lower level here, maybe at 45.82 is the potential. But I would say, you know, the 7% number down over here under these conditions is to me the most obvious. Now you can see in here this what looks like a harami cross. Now, harami is Japanese word for baby. So it's the body within the body is where you get baby. It's maybe not quite, but it is definitely a hanging man, which you see us right over here, which means that what happens is that sometime during the week there are very good sellers, and then it comes back. And those buyers during that period get hung. That's why they call it a hanging man. And what normally happens is that it comes down the following week, or it'll make another star right over here and then come down the week after that and then complete the topping formation here. That's what I will be looking for here on the weekly chart. Momentum here on the reversal scout, still strong. This is where it turned up right over here. It confirmed this bottom. It suggested this top would be taken out. That all happened absolutely perfectly. And now, if you want to follow the same perfect rhythmic patterns that you have in here, and you can see we're going to be looking for a topping in here and then a move to the downside. You can see in here all of these periods where 2 cycles were coming down. You can see the mid cycles where, like you have right over here, it comes down to supports, gives you hammers, and then moves up again. This was so strong, could barely fall right there in the mid cycle. But what happened again in the corrective phase here with both cycles, you had the big decline. Every single one of these was more than that 4% number that we're talking about, only to this level. So it means that there is likely going to be a decline. Now, if you now go to your platforms and start buying all the puts and selling everything, you're making a big mistake. When we give this kind of analysis, we don't say go short it right now. I'm giving you the indications of what has a highest probability of happening. This is the probabilistic analysis. And when you see the daily and you see the 2-hour charts, you will say it's time to wait. Let's let the market prove to us that is going into that corrective phase. Right now, this is showing a ton of strength. Now, here is your daily chart here. And what this shows us on the daily chart is that you've been in a uptrend here that was established, around the beginning of last November, and it has continued up through this whole time frame right over here. This cycle right over here was exceptionally strong. It went up the whole way and then just had one day coming down to complete that. Here you could see it had 3 days coming down to complete that. These are incredibly strong cycles. This was 1 day over here. You only get this in monstrously strong upside moves. Look at the slim ribbon PO on the bottom. It turned green over here when you're looking at November. It has stayed green ever since. And every time it gets below the 25 and then moves above it, it gives you momentum resumed indications. And you could see every one of those fantastic. You can see in here where it's so strong, it can't even tick down in there. And the slim ribbon giving it the support. It's supposed to on the way up. We always talk about slim ribbon is very good for support and resistance indications. That brought me right over here where I'm looking at this time frame right here and these projections. Now you could see what we have in here is an upper channel and a lower channel. And both of those are still configured positively. In other words, the lower channel does not show a break of this cycle low yet. It could only do that. It gives us negative information. This is why you don't short yet. This is only 3 days into the advance. You don't want to short that yet. You want to wait till it tells you. If it breaks 4920.31, this right over here, it suggests the intermediate correction has started. Even if it threatens it, I would start to indicate that this would be then coming down. I would be building this lower channel in here and showing it coming down into these lower levels right over there at those supports. But right now, I don't do that because I don't want it to look negative. It's not negative. Everything we're looking at here is positive, but looking back at that weekly chart, I am anticipating that there will be some peaking developing in here, and we don't have that yet when I look at this. Now, what helps me understand the movements that I see in here, besides the momentum, the configurations, the translations, everything I'm talking about. And if you don't understand that, it's important for you right now to consider taking our cycle analysis workshop, because that jargon will turn into real language that you understand if you do that. So we're still looking at an upside cycle structure right in here. So when I grab this chart over here, this is going to show you both the daily chart on the left and the 2-hour chart on the right. And you can see in here that upward channel that it's going into, that's this rise over here. And I'm going to blow this up for you to see. So if you look on the bottom, you can see the translations in the cycle. In other words, each of these arcs are the ideal cycle. And you could see these dark lines. That's where the daily chart made its important lows, comes down and hits the support and then begins to move up. And look at these beautiful cycle rhythms that are in here. This decline that happened on that 100-point down day right over there came right at the timing for this important low. That meant there wasn't much more time to come down when it came down to these supports. and then began to move up again. Let's take a closer look. You could see the slim ribbon went neutral and then turned positive again over here, as this now has established 4920.31 as that key cycle low. And if it gets down close to that or breaks it, it's going to tell me that something has changed as I look out in here, and that this uptrend, and what essentially we're looking at are the translations in here, and this showing the upside energies changing how this looks and giving us these higher highs and higher bottoms, establishing this uptrend. That's what makes the uptrend. The reason there are two arrows here is because they're showing you that the strongest energy is to the upside. It takes what could be a neutral condition, looking at these cycles on the bottom, and then pushing it upward and showing you how the formations come, and that tells you when something is positive. If this peaks, and I'm just going to put an alternative in here right over here, let's say this peaks early, and let's say this doesn't get up to that high over there, and then starts to turn down over here, and then breaks those lows, it will tell me that we're in that decline right over there on the 2-hour chart. And then what's going to happen in the next one, it will move up over here, it will hit some resistance, and then it will begin to move down again, and we'll be in that downtrend, and it will be defined in here on this chart, on the 2-hour chart. This is really important. I want to show that to you because then you get a good sense of how we use multiple time frame analysis. The 2-hour chart giving me information about the daily chart that you see there, and the daily chart over here giving me information about the weekly chart. So we work back and forth in time frames, the weekly giving us the most dominant information, then the daily, then the intraday. But when the intraday starts to give us information, we work back in the other direction. This is very advanced cycle analysis. I wanted to take some good time to look at the depth of this, but I think it's just amazing information. And this is how the team looks at this stuff. I mean, really to get the feel for the market. And that's why we have such a high percentage of success in our trade ideas, because we put this all together in the sum of the evidence type of analysis. So again, looking for the market to create a top in here. We're trading at 185% of the market cap to GDP. It's the second highest in history. That's 185%. In the time of the 2007 peak, just before the financial crisis, it was 107%. Now we're 185%. The valuations are beyond crazy right now. So those resistances should start to matter. We should start to get upward movement that fails in here and get a sign there on the S&P 500. Again, the big number in here will be when it breaks 49.20.31, and I say when because of the high probability that it will do so. That is a look at the stock market. I want to look at one more thing in here, and that is the market condition indicator. I'm sorry, the market condition monitor. And I have this set on time frames right now. So you can look at it on the trader version right here or on time frame version right here. And I have this, I'm going to go to the daily chart, and this gives you the indexes and the top stocks that we look at. And you can see in here on the daily chart when these things turn positive on our indicators. So the S&P 500 and the slim ribbon, you can see that where they turn positive. This was January 19th and November 7th when these indicators last changed. You could see how early you got the indication of the momentum being favorable here back in January, back in February, because the IWM was later over here back in January and back in November. Just unbelievable how these things turned upward. And you can see in here that Apple has now turned negative during the beginning of this month. And it has been weak, and Matt showed you analysis in that. So this is just fantastic. If you want the 2-hour, which I just showed you, it tells you much faster when things change and when those conditions change, as you see right in here, looking at all of these stocks in the 2-hour. You can go down to 15-minute and 3-minute, which is available only to level 4 members for that version of it, or if you want to use the trader version right here, where it gives you the condition setups right over here. And you can see I can scroll here on the very bullish ones right over there, or the ones that are very bearish conditions right in there. As I'm looking here at the short term, you want to look at the intermediate term, you can just click on that and change it. So this for level 3 and level 4, the market condition monitor, I wanted you just to get a good sense for seeing how I use this, and you get a look at how you got very early indications for this stock market turning up. So those conditions still positive right now, as you see, not giving you any indication that it is time to short. So now you can put your hands back in your pockets and let the market tell you. Don't jump ahead. If you start to get some indications, make your first entry small. There's a good chance you're going to be wrong, especially if you're trading against the momentum indicators. So I always say enter with a quarter position. If you're wrong, well, it's basically a flush room. That is my look at the stock market for this week, and I hope you found that super informative. You can really start to learn about what we do by taking that level 1 special. Matt showed you all about it. Go up and click that learn more button on the askSlim.com website, and just $10 non-recurring for the first month. It's 1 month only. If you love what you're seeing, and I know that you will, you'll be invited to come back at a special rate. Sign up for $10 for all of this information right here. That includes a stock index report daily, momentum tracker, our weekly ETF review, and great resources for your trade planning. Just a great special. And this is the final week for that. $10 non-recurring. Don't worry, you sign up for $10. You're not going to get charged again unless you want to. That's it. If you're new to askSlim, you can learn from this bunch of pros that we have in here that do this very unique analysis, and you can adopt it and make it your own. Our broad amount of education and analysis that we have for traders and investors, I think, is surpassed by none. Team, you did an amazing job. What do you got to say about this?
That was a fantastic show. Great analysis, Slim. And
Thanks.
RV and Katie, great work.
Yeah,
Lot
That
of
was
fun.
awesome. Love that
Gotta say,
2-hour
right-
chart, Slim. That was absolutely a thing of beauty right there. So.
Yeah, I appreciate that. Yeah, love it too.
love to
Thank
see
you,
the mentor
everybody.
at work.
Yeah,
Thanks,
great.
everybody, and have a great weekend.
That's it. Next week, we'll have a regular market week, and then we'll follow that up with Market Week Live again. See you then.